that's important. Okay, we like to start. No, but that's important. Okay, we will continue with our seminar. And now we have our colleagues from the University of Münster who are talking about, will be talking about VAT and customs on e-commerce transactions.
Exactly. Thank you very much, Walter. And only to give a short introduction, my person, Michael Wolfgang. And I'm happy that I have two young colleagues with me, Dr. Nathalie Haagsen and Benedict Wemmer. Both are working in our institute and as well as in our consultancy company. And they are specialized in especially customs and VAT, both, this interdependence of both. And yes, so the floor is yours. And I sit down.
Yeah, thank you so much. Yeah, we are going to focus on the taxable event at importation, and that's a very, very interesting topic because the definition of the import in VAT law is very, very interesting. But we are going to focus on only the e-commerce issues of that topic. That means we are going to talk about a situation where someone, being a primarily a private person, will just import, buy goods online, and that goods will be imported from third countries. For example, I'm going to buy a lipstick for 20 euros in Taiwan. I'm going to buy new earphones for 50 euros in China, or even a coat for 200 euros in Canada. And those goods will come to the European Union, and then those goods have to be cleared for free circulation. And as well, the question would be how the taxation of the supply takes place. That means from a dogmatic perspective, we are going to have two taxable events that we need to talk about. That means, first of all, we need to talk about the importation of the goods. That means the goods have to be cleared for free circulation. That will trigger import VAT or should trigger import VAT. On the other hand, we'll talk about the supply of those goods themselves. That means the supply of it by a trader to that private individual in the European Union, and that might trigger VAT. So, until mid-21, as we just heard in the presentation before, there was an exemption on import VAT up to 22 euros. So that means there hasn't been any import VAT on those small consignments. Besides those third country established traders, they usually did not register for VAT in the European Union. That means there was a complete VAT relieved transaction. No import VAT on those consignments, and as well no VAT on the supply of the goods themselves. So mid-21, the situation changed. And to restore a level playing field for EU traders who had to register in the past when exceeding a distance sale threshold in all of the EU member states where the goods had been transported to, and to restore that level playing field, we got new rules. The VAT directive has been amended with effect to the 1st of July 21. That means we abolished that 22 euro threshold for import VAT. That leads to the situation that we have to submit electronic customs declarations for very, very small consignments to be able to levy the import VAT. Besides, we have implemented new rules for the importation of goods in small consignments. One is called the Import One-Stop Shop. The other is called the Special Arrangement. And we are going to focus on these two concepts. We're going to explain how those concepts work in practice. And according or in line with those VAT amendments, we also had an amendment in Article 221 of the UCC Implementing Act as it comes to customs. So when we talk about the import scheme, I just I'm just going to click here. We have 3 new concepts. So one of the concepts is not new because the concept you see on the left-hand side, that is a normal procedure that we also had before July 1st of 21. The second very new concept is, as we just said, the import one-stop shop, and the third concept will be the special arrangement. The difference between those 3 concepts is that the normal procedure does not only apply when the goods have a certain value, whereas the import one-stop shop, as well as the special arrangement, only at the moment are only available if the goods do not exceed an intrinsic value of 150 euros. So we are limited at the moment. Reforms are already in discussions, but for the moment we are limited to an intrinsic value of 150 euros to be able to apply the rules of the import one-stop shop as well as a special arrangement. So, and since the Spanish colleagues already talked about the intrinsic value due to timing reasons, I think we can just skip that.
Yeah, I can start with the first and mostly unusual idea in e-commerce. We can do a normal customs clearance, a normal customs procedure. The first question is, in this situation, who is a customs declarant in e-commerce? Usually the private person, the customer. Of course, the representation by a broker is possible, but in general, often the customers don't understand where the goods come from. They buy on the internet and then they are really surprised by the customs authorities, at least in Germany, with a lovely letter. Dear customer, we have your package. Please come visit us at our local customs office and bring your invoice. And they go to the customs office. Together with the officer, they look in the package. And yeah, this is, from the legal point, an oral customs declaration here. In Germany last year, the German Customs Administration published an electronic tool, this Atlas Impost IPK. This is this allows private individuals and small companies without any custom softwares to declare these small shipments digital via a web application on the customs homepage. But in practical, the most private persons use this oral customs declaration. They go to the customs offices. But this first option is overall very unusual. So Natalie will give you an insight on option 2.
Yeah, I just talked to our Spanish colleagues about that in the break. A few years ago, I tried to be smart. I tried to buy clothes in Canada to the Incoterm delivered duty paid, and to be honest, I will never do that again. Because I thought under DDP I would have nothing to do with importation. I would not be liable for import VAT and for customs duties. I received a phone call from the carrier who wanted to hand in the customs declaration in my name. Then I said, I don't want that, because I bought DDP, and DDP means I'm not liable for anything in respect to customs and import VAT. And then the next phone call, they told me, we need just a POA. It won't cost you anything. You won't pay any duties, any import VAT, no customs duties. Just need your POA to be able to declare that in your name. Then I said, I won't do that. Then they told me, look, we can't do the importation on the Canadian person because he's not established in the European Union, so we need you to be the declarant. I refused again. Then I told them, just send back that code to Canada. I don't want it. And then I received the code with a customs declaration, and they did an import in their own name. So undervaluated, and then I returned the code. And that caused them also more practical problems that we're going to focus on later on. But again, I'm not going to do that anymore.
And from the legal point of view, this isn't correct. Of course, the Canadian, for example, can do the customs declaration here, but they need a permanent business establishment, and I can understand why this is not quite common. Yeah. On the other hand, there's an exception rule. It's Article 117 Union's Customs Code for persons who occasionally lodge a customs declaration up to 10 times a year. But for commercial things, we cannot use this. So, yeah.
I wrote an email to my Canadian supplier and told them if they would need some advice, they should just refer back to us. So the second concept would be the IOSS, the so-called import one-stop shop. So the question is, what is the import one-stop shop? And if you just look at the name, you might get, if you don't know, you might get the impression that it is something that is connected to customs, which is absolutely not. The import one-stop shop is an electronic portal which is available in each member state, where you can declare the VAT on the supply following the importation. So the concept behind the IOSS is the following. We have dogmatically seen two taxable events. We have the importation and we have the taxable supply. The taxable supply, according to the new place of supply rules for import distance sales in the European Union, at the place where the customer receives the goods. So that means we have the supply itself is taxable in the European Union. There should be VAT on the supply. So that VAT needs to come to the tax offices anyhow, and for that reason we installed the import one-stop shop, because a foreign trader can, via that portal, declare his VAT on the supply to the tax administration in one EU member state. He only needs one registration in one EU member state. Then he's going to pay his VAT for all his supplies of imported goods transported to any other EU member states via that portal, and that portal, that authority behind the portal, will pay out the VAT to the different member states. When doing so mentioning the registration or identification number of the IOSS in the customs declaration, there's a link to customs, but mentioning that number in the customs declaration, there will be an exemption of import VAT. So the concept is no import VAT on the importation, but VAT on the local supply, and that VAT can be paid by the trader via that portal, which is the IOSS. So we have a member state of identification. I need only one registration in only one member state. That is a benefit of the import one-stop shop. I could choose to get registered for VAT in each of our 27 plus one member states. Plus one would be in Northern Ireland. I could choose to get registered in every member state I supply goods to. If I don't want that, I can just use the import one-stop shop, get registered in only one member state, and just hand in my IOSS returns in that member state. So without any problem, if I'm a trader being established in the European Union, or if I'm a trader being established in Norway. Any other traders face the situation that they need someone being comparable to the indirect representation we know from customs. They need a so-called intermediary, and that intermediary also needs to get registered for the import one-stop shop. And that intermediary, compared to the customs situation, is also liable for the VAT. For the VAT on the local supply. So that means we have a joint liability of a third country-based trader with the intermediary for the local VAT. And for that reason, it is, as far as we know, quite difficult to find someone who wants to be the intermediary. We have been asked last week from someone, I didn't tell you, we have been asked last week from someone if we would like to be the intermediary. And I said, I don't think so, because of the liability issue. So this, I think, this is only the requirements and procedure. I just explained that. So then we have the special arrangements. This is the third concept. This is quite the other way around. So again, we have two taxable events. We have the importation and we have the local supply. So in this case, since the import customs declaration is handed in the name or on behalf of the recipient of the goods, which is the private individual in the member state of destination, the place of taxation of the supply is not in the European Union. So according to a place of supply rules, the place of taxation is outside of the European Union. For that reason, the supply of the goods is not taxable. No VAT is to be levied. On the other hand, we have the importation, and in this case, we have the import VAT that will apply. So that means we have no local VAT on the supply because the supply is not taxable. But on the other hand, we have the import VAT, which will be levied for the importation of those goods into the European Union. So, and declarant will be the private individual. That means we have a carrier that's handing in the customs declaration in the name and or on behalf of the person that's going to receive the goods. That person needs to go to the next, for example, DHL store to collect his parcel. And when collecting his parcel, he will pay the import VAT plus some additional costs for handling, etc. For that, in this way, he will pay then the import VAT. So, and the carrier is supposed to hand in a monthly return or a monthly declaration to the customs administration. And in that monthly return, he has to declare what kind of import VAT he collected, what he might think he can collect within the next time, or the import VAT he already knows he won't be able to collect because the parcels have been stolen, lost, whatever. Only problematic and to be discussed issue on that is that we have in the VAT implementing regulation a rule that says since the private individual might not know that he is going to be the importer of records, or he might not know that he is going to be the declarant, we have an authorization that is deemed to be granted. Again, this authorization is deemed to be granted according to a rule. This is laid down in the VAT implementing regulation. And that led us to the interesting question if that authorization is also valid for customs reasons.
Yeah, exactly. From the customs point of view, this is very interesting because does the POA also apply for customs purposes? I mean, it makes sense, but I can't tell from the law. If I look at Article 19, I don't see any fiction of a POA there. The POA must be issued by the representative person to the representative. That means I have to actively give permission to a logistic provider, for example, or a broker. The VAT authorization doesn't mean that we can also authorize the representation to make customs decisions or customs declarations here. So this is quite a legal issue, especially because the implementing regulation of the VAT law don't allow any interpretation of customs law that goes beyond the Union's customs code wording. So to reach this, we have to change the customs law, I think. But I admit a theoretical argument, maybe. In practice, it works.
To this, what I also already said, this is the report the customs broker has to hand into the customs broker has to hand to the customs administration, for the consignments, the last bullet point for the consignments that have been stolen or have been lost, and he knows that he is not able to collect the import VAT payable on those, he will be held liable for that. So that means the carrier will have to pay the import VAT for that consignments. And also for that reason, it's not the priority number one for carriers to use that kind of arrangement. So I think they will prefer the IOSS rather than the special arrangement because they have lots of administrative things to do when they're handing in those returns on a monthly basis. And apart from that, if the parcels get lost, they are also liable for the import VAT. So, and from a customs perspective, it is very, very interesting, and we're going to do that after the presentation on those concepts, to ask the question, what happens when the customers do not collect their parcels, if the customers do not want to have those goods, if the customers, as me with my code, would like to return it because they don't like it. So then practical problems at hand.
Yeah, I can summarize new rules very quickly so we can skip to the interesting point here. The new rules, Article 143, Literature A of the Delegated Act. To summarize, we can use a specific data set. We don't have to deliver all the data from a normal customs declaration. We can skip a lot of information, especially this whole classification process. So we can use the harmonized code. And one thing, we cannot use this special data set in the procedure 42. This is an exemption, but in the normal case, we can use it. So with iOS as well as a special arrangement here. So, what's about the returns? The interesting question here. A lot of private person will send their packages back and say, okay, I don't want the coat or the lipstick or whatever I bought last year, last month, last week. So, from the customs point of view, we need two applications. The first one is we need application for invalidation of the customs declaration. That means Article 174 of the Union's Customs Code. The second one is we want, as a logistiker, we want the money back. So we have to apply for a refund of the import VAT. And in Germany, these are two separate applications. First one is a very technical on the customs system. So we have to make sure that the customs declaration is invalid. And the second one is actually a written application to the main customs office. And we have to show the customs that we want a reimbursement for the import VAT. This leads to some practical problems, especially because of the large number of cases that have been processed on the one hand by the logistic companies and on the other hand by the customs authorities. And in our opinion, we need simplifications here, especially at the large logistic hubs to ease the burden on the businesses and also on the authorities. For example, maybe we can combine some cases like clusters with the same group of reimbursements. The customs authorities could do random checks and check if they can find some problems. And in the end, we want, of course, a fast reimbursement. But if we have a look, we look in the customs law doesn't provide such simplifications. This is a classical problem between theory and practice. So, at least in Germany, this currently leads to long waiting times, often significantly longer than a year. So we have to speak about simplifications on this point.
Yeah, and if you look into the guidelines of the European Commission on e-commerce, or on the e-commerce rules, there's a very, very short description on one of the last pages on the return of those parcels. And when you read that, you might get the impression that it is very easy. Just return the parcel, you get the money back, and all is done. That there are two applications behind, and that there is a customs process, and that it takes some time, that there needs to be someone working on those applications and refunding the money that you cannot read anywhere. So for me, just reading those notes from a VAT perspective, I was like, oh, that needs to be quite easy. And then I started thinking from the other side, from a customs perspective, and then I thought there must be huge warehouses where all those goods returned are stored at present. Because I don't know if DHL or any of the other is having some sort of system where those applications are automatically forwarded. Maybe we could use artificial intelligence for that, because there must be tons of returns that needs to be processed, and where the import VAT would need to be refunded.
So, as always, there's still a lot to discuss. Thank you for your attention.
Good morning. Really interesting. I agree with the parcel, but for IOSS, has been discussed the refund. If I send these goods from China, and I return the goods are sold in Italy, and I want to return the goods because I don't like, the shirt is too big. The shirt was transported via IOSS. Now what do? Shall I send it back to China? The shirt costs 10 euros. So it's true that the IOSS simplifies a lot, but when the goods are on the ground in Europe, as a taxpayer registered under IOSS, I still need at least a couple of registrations because these goods will not go back to China. I have to sell these goods again, maybe in Europe, because logistically, it's not only the refund. I refunded the customer, but logistically the goods remains on me.
Yeah.
And there is such a big black hole in this legislation because me as an operator, as a marketplace operator, I don't know what to do with these goods.
Yep, that's a very interesting question, because what would happen if the private individual who bought that T-shirt returns it when we're using the IOSS? So when we use the IOSS, we get a VAT exemption on the importation due to the fact that we report something on the IOSS. So we would need to correct the IOSS report because the customer doesn't want his parcel. So that would mean that there isn't any exemption on the importation because the importation is dependent on the import exemption is dependent on the fact that I have to report something on the IOSS, which I won't do. So we would need to just roll back the whole process. And then I have the interesting question, but what am I going to do with my T-shirt? Do I send it back to China or just do I try to sell it somewhere else? Under then different rules because the T-shirt is already in the European Union, hasn't been imported, so the import VAT rules do not apply anymore. So I have different rules to apply, but then I need a different registration for any other portal or any other idea I might have. Yeah, that's complicated, definitely. Yeah.
And in practice, probably a lot of goods will be destroyed, unfortunately.
Not possible.
Yeah.
It's against the regulation.
Yeah, okay, from environment law. Yeah.
I know what we do.
Yeah.
I cannot say what we do, but it cannot be destroyed.
Yeah.
So it's really a black hole.
Yeah.
And you have to create the
No, but when you look at the legislation, you just see that the discussions seem to have been ended at the moment where the customer received his parcel. So that means it seems to be the impression that everybody just takes his... Yes, exactly.
It's impossible.
Yeah.
We have another question, I see.
Thank you and good morning. I'm Walter van der Meer, trading compliance for UPS. I cannot answer for DHL, but I can tell you that looking at the transport cost and all directed cost and the value of the goods, it really does not bring anything to try to recover the VAT. That could, of course, change when the law is changed and the value of the goods, the threshold value, is increased. Yeah. I have one additional question. In the beginning, you referred to Article 22214 of the implementing regulation, determining the customs office where you need to present the goods for ISSS goods or non-ISSS goods. And Article 22214 states that the customs office competent for the release of the goods in a consignment benefiting from a relief of import duty. We had fierce discussions with different member states about this because, in our opinion, if we do not apply the low-value relief of duty, we could still import in any member state, in our case, in the first member state. And we've discussed that with DG Taxut and we discussed it with different member states. Germany does not accept this interpretation.
I know. Yeah, we had the same discussion with a client in Germany. Same problem. He had goods that had been an intrinsic value of less than 150 euros. It was a B2B transaction, and he wanted a procedure 42, and the German Customs Administration refused. We tried to discuss it with them. It didn't succeed. So they told us to open up a T1 procedure and go to Austria because the shipment was supposed to be transported to Austria and then do an importation in Austria because the goods are supposed to remain in Austria. So they didn't clear the goods for free circulation in Germany. They refused.
And another deficiency is that in certain member states, not everybody can have an IORI or a VAT number who has a business activity like dentists, for instance. Thank you.
Thank you.
Any other questions? No? Okay, thank you very much for your presentation. Okay, and then we're going to move onwards. And I first have Vincenzo. I see you are coming to the stage already, Sergio. Do I need to change it? Do you want to go first, or? Yeah? Yeah, oh, there we go. You want to have the microphone? Okay. Yeah, then I'm going to hand over to Sergio, who is going to address a very topical issue as well, the VAT and customs treatment of distance sales of goods imported and WTO. And you're working for IBFD as a researcher. So glad to have you here, and I'm going to give you the floor.
So good morning also from my side. I would like first of all to thank the host and organizer, the University of Rotterdam, for this invitation, and also University of Bologna for having me here. When we were thinking about the title, okay, it sounds quite weird, we were thinking, okay, maybe it's interesting to bridge all the topic addressed until now, bundle them together, and give a different angle, a different perspective, a theoretical maybe. And if you think about it, when you talk about imports, when you talk about trade law, WTO is the main source of international law. In particular, we will be talking about the GATT, General Agreement on Tariff and Trade. And of course, we saw it, like when we talked a bit at the beginning about VAT on import, it ensures external neutrality. Okay, so you apply VAT both on domestic, but also on imported goods. And it's important, of course, also under this perspective of the WTO. And it's important also because sometimes you have this kind of conflict. Is it like a tax as a VAT, internal tax, or is it actually customs duties? And therefore it falls under different scopes of the WTO GATT agreement. And then we saw it also with the deduction. Of course, if you allow for deduction or not, then you can actually harm internal neutrality for VAT purposes. And we saw it also with the evaluation, of course, Article 7 of the GATT on the evaluation and the General Agreement on evaluation. And it is crucial because, of course, you can undermine competition between domestic and imported product, both with different tax rates, but also with different tax base. So if you have different tax base for domestic supplies, then different for importation of goods, then you have a different taxation, effective taxation, which is, of course, discriminating. So we saw, okay, you know what, let's go for WTO and see what happens. This is the agenda for today. I will be, first of all, briefly give you an introduction, some background and context, then set forth the legal framework of the analysis, and then we will try to delve into a bit of analysis, legal analysis of the topic, theoretical one, and then, of course, bundle up with a summary and some conclusion and shaping some further avenues for eventually investigation. So, where does it all come from? We could actually trace back the discussion about e-commerce all the way back to the 90s, 1996, the report by the US Treasury Department on the information superhighway, where they were already talking about the issues raised by e-commerce and taxation. But actually, the most, let's say, proximate action was the one by the BEPS action, report 1, basically, challenges raised by digitalization, where the OECD said, you know what, we do have some important issues on importation, especially, I would say, exacerbated by e-commerce, because we have an increased amount of goods imported due to online sales. And still we do have this low value consignment relief from VAT. So there is an increase in VAT forgone, on revenues forgone. And also this affects competition between domestic and foreign suppliers, because VAT applies on these supplies internally, but not from those imported. So we have to address this issue. Afterwards, the Commission followed up on this and said, okay, we uphold this view, it's interesting, we agree, there is a problem of competition. And they also said, well, there is also a problem of abuse, because these systems of threshold, of exemption gives rise to undervaluation because you have an interest in undervaluing in order to enjoy the VAT exemption on importation. So, of course, there was still the market competition issue, but also another one, the one of abuse. And it's interesting because when you look at the proportionality of a measure, you always have to look at which was the policy purpose. And I will get to this later. So, on the basis of these rationales, then the VAT e-commerce package was adopted, and these are the three main sources structuring the VAT e-commerce package. Now, which are the two main relevant changes for the purposes of our discussion? Well, first of all, we already saw this before, the removal of the VAT low-value consignment relief. So before we didn't charge VAT, now we do. And this, of course, as I was telling you, raises a question of proportionality. Just recently, the UK Supreme Court was asked this exact question, whether it is proportionate to remove this exemption on every kind of import, because in this case, also, suppliers in good faith would be caught in the crossfire when you remove this exemption to fight against abuse. What if I'm supplying and actually really the value of the good is really under the threshold? And the other problem is that when you remove the threshold, I mean, the idea, the rationale of the threshold was it is not worth it to collect this small amount, VAT on this small amount, because the cost of collection is exceeding the revenues. But then what they did, like they removed the exemption and they shifted the collection burden on intermediaries, on electronic interfaces. How did they do that? By introducing a pillar transaction, I call it transaction, which is the distant sales of goods imported, under Article 14.4.2 of the VAT directive. So it falls within the scope of the transaction, which is a supply of goods. However, here we're talking about distant sales of goods imported. So if an electronic interface is facilitating a distant sales of goods imported, then they have the obligation to collect VAT on distant sales of goods imported. In order to simplify this compliance obligation, then there is the import one-stop shop, the IOS, discussed by our German friends. However, there is no denial that the removal of the threshold creates additional compliance costs. They are simply shifting this cost on electronic interfaces and trying to create a simplification. Yet, when there is compliance costs for the business, then this cost might theoretically be shifted onto the products, cascading effect, and therefore increase the price of the product. Because the cost of the product is not simply the value of the product plus the VAT, but also the cost of VAT compliance. And therefore, these rules might indeed end up affecting the competition of non-union goods with union goods, if you think about it. Now, we are looking at this also from, as I was telling you, from the point of view of the legal framework of the WTO, GATT Article 3, which sets for the so-called national treatment obligation. What is it about? And I quote, "This obligation seeks to prevent members from applying internal taxes, Article 3.2, and regulations, 3.4, in a member which affects the competitive relationship in the marketplace between the domestic and imported products." So again, you can see the overlap. The idea of the Commission was re-establishing a level playing field, re-establishing competition. Well, if it is so, this is the provision in WTO. So you have to look here whether this is true or not. Because the question here is, okay, you want to have a quality of competitive condition, but are you sure you're actually achieving that, or you are going towards protection of domestic products? There is a very subtle line between the two. Now, let's go with a bit of analysis of this. Remarkably, the scope of GATT Article 3, both 2 and 4, is quite clear. Article 3 applies only to imported goods. So it doesn't apply to goods in general, and it doesn't apply to goods destined for importation. So they must be imported goods. This is the custom status of these goods. What is the tectonic shift in this VAT commerce package reform? That the VAT architecture was a territorial one with a territorial scope, and now this is changed. If you read Article 2.1 of the VAT directive, the supply, the intra-community acquisition, they all presuppose the importation of goods as a taxable event. So you see, for instance, Article 2.1a, the supply of goods within the territory. And if you also go to the case law of the CJU profit tube case, for instance, in that case, goods they have to enter within the territorial scope of the VAT in order to undergo a taxable transaction. So the taxable event is a necessary precondition for undergoing VAT, being it on the chargeable event as a supply of goods or on importation of goods, which does not concise. The importation of goods as a taxable event and as a chargeable event are two different things. However, what this reform does is shifting the chargeable event before the taxable event. So it extends the territorial scope of the VAT directive. So now VAT applies to goods which are not imported yet, because Article 369N, which is essential for the application of the IOS, reads, the chargeable event shall occur at the time when the payment has been accepted. So the legal obligation arises before the goods are imported. So there is a rule which applies to non-imported goods. Now, if we also look at this structure from the Article 3.2 of the GATT, which is usually thought of as the article applying to indirect taxes, especially VAT, it covers indirect internal taxes and internal charges. And it reads, the products of the territory of any contracting party imported, so again the requirement, into the territory of any other contracting party shall not be subject to internal taxes or other internal charges in excess of those applied to like domestic products, end quote. So in order to understand whether the measures adopted with the VAT commerce package fall within the scope of the prohibition of Article 3.2 of the GATT, you have to see whether they are internal taxes or internal charges. But then there is no definition in this article of what is an internal tax or an internal charge, and there is no definition of such thing in any of the WTO agreements. So we don't know. We don't have a definition. However, if we go into the case law of the WTO, we see that, first of all, the domestic law definition of the policy purpose of the charge are not decisive at all, because otherwise members would be easily able to decide whether a provision falls or not within the scope of a provision of the WTO. So what you have to do is to look at the characteristics of the measure in order to qualify it as a legal characterization. Only then you can say, okay, this measure falls within one provision or the other. And in this sense, an important element that would indicate that the charge constitutes an internal tax or other internal charge within the meaning of Article 3.2 of the GATT 1994 is whether the obligation to pay such charge accrues because of an internal factor. So you can define the legal character of a measure by looking at its legal source, at the source of the legal obligation. If it is an internal factor, then it may be qualified as an internal charge or an internal tax. But what does it mean, internal factor? And it says, in the sense that such internal factor occurs after the importation of the product. So once again, the prerequisite for applying this provision is also the importation. In conclusion, what we have found is the following. If we look at the new system from a WTO perspective, in particular the national treatment obligation, which ensures neutrality between domestic and imported products, which is essential, we see that first of all, it applies to imported products, imported goods. So even if we found probably that there is indeed a different treatment between, so even if we found that there is indeed an infringement of this provision, in any case, the case law of the WTO is clear. You first of all have to look whether the provision falls within the scope. And in this case, it doesn't seem to fall within the scope because these are not imported goods. If you also then try to qualify these measures under the WTO perspective, then it's quite tricky because these measures apply to non-imported goods. There is a change, there is a shift, and therefore it's difficult to say that these provisions could actually fall under Article 3.2. In fact, in order to fall under Article 3.2, for the purpose of these provisions, the tax must apply after the importation and on imported goods. However, distant sales of goods imported, according to a chargeable event, occurs before the importation. So the question is whether a measure which affects non-imported goods would actually be covered under the GATT. And this is quite interesting because if it is not, then I can just create my law and say, okay, I will discriminate on non-imported goods just like predating the chargeable event. Now, this analysis is quite also going to be probably like even more interesting in light of the VIDA proposal, because the VIDA proposes to indeed make the IUs mandatory. So if there is a problem of affecting competition in that case, then it will become quite interesting to analyze it. And also, it's important because, and it's also like another evidence of what I'm saying, the UCC reform proposes to actually align, finally, the chargeable event for VAT and for custom purposes. So the new proposed Article 1593 says, okay, since we now have this chargeable event in VAT, let's also shift the chargeable event for custom purposes. So whenever we have an importation, we also have VAT on the importation, on the distant sales of goods imported. So they are trying to reconcile this difference. One closing word. All of these, I guess, could be quite interesting also in the light of this proposed customs reform, because the proposal would definitely remove the customs exemption as well, the minimum exemption as well, and therefore electronic interfaces, namely intermediary, would be obliged to collect VAT even on distant sales of goods imported exceeding the threshold. And therefore, if now it is extremely complicated and complex, and in the end, the costs of this compliance with VAT are shifted to the final consumer, and therefore are falling on the product, this will be even more in the future with eventually the reform of the customs code. I thank you all for your attention. If you have any question here or even afterwards, this is my email. This is also the webpage of my employer. You will be happy. IBFD is an international organization which deals with international taxation based in Amsterdam. It stands for International Bureau of Fiscal Documentation. And we basically deal with international taxation under every form, tax treaties, feedbacks to European Commission, UN, and so on and so forth. We have a huge database of case law, country specific. So if you're interested, just check in on the website and you will find answer. Thank you. Thank you.
Yes, thanks a lot. Okay, then we going to continue. Go actually back. So, and then we have Vincenzo Carboni. You are going to discuss the VAT and custom treatment of distant sales of goods imported and the WTO, but then at a little bit of a different perspective. You are going to use this mic as well? Okay, then I'm going to hand over straight away.
Thank you so much. Goedemorgen, iedereen. I don't know if it's the pronunciation or it's okay. I try to say good morning to everybody in Dutch. And I finish my Dutch words, so I have to continue in English. So thank you so much. I have to say thanks to the University of Rotterdam and the University of Bologna for the invitation. And I have to say that it is not so easy to take the floor after such a distinguished speaker, but I will try to do my best, even if the time is not helping me because we are in a hurry probably, so I will just give you some peels retracing the evolution of this broad topic. So I will try to start with the WTO environment and to highlight the connection between custom and WTO in connection with the e-commerce. Then we will discuss about EU context, and we will end with some future perspective. So one of the most important WTO acts in terms of custom duty and e-commerce is the so-called moratorium on custom duty and electronic transmission. The history of this important act dates back to 1998, when a WTO member first agreed to not impose custom duty on electronic transmission. This agreement was a part as we know, of a broader declaration on global and economic commerce adopted in the second ministerial conference in Geneva, in Switzerland. And the purpose of the declaration was to encourage the growth and the internet in a global e-commerce by maintaining a free market environment, even if it meant foregoing some taxes and tariff on digital trade. The moratorium was initially intended as a temporary measure, with renewal occurring every 2 years at the biennial WTO conference. But we have to highlight that the term electronic transmission was not explicitly defined, leading to a broad interpretation that encompasses a wide range of digital content, including software, email, text message, and so on. Over the year, the moratorium have been renewed, reflecting the evolving nature of digital trade and the increasing importance of the electronic commerce in the global economy. However, the renewal have become increasingly contentiously, with some countries expressing concern about the potential revenue losses and the impact of their ability to regulate digital trade, and the lack of clarity on the scope and definition of the electronic transmission have been recurring issues in discussion about moratorium, as we can understand. Some countries like Indonesia, for example, have interpreted the moratorium as an applying only to the transmission process, not to the content of the transmission, allowing the possibility of imposing custom duty on the transmit content. This interpretation highlights the ambiguity surrounding the moratorium and the need to great clarity on its scope and impact. However, discussion regarding the future of this moratorium have been ongoing within the WTO. Some countries have raised concern about the revenue implication of not taxing electronic transmission, especially as the digital trade continues to grow. There have been calls for the moratorium to be extended indefinitely, while others have proposed modification or reconsideration of its scope. As of now, the WTO members continue to operate under the provisional moratorium on custom duty on electronic transmission, while negotiation and discussion regarding its future continue. The moratorium indeed have been extended multiple times, the most recently at the 30th Ministerial Conference in Abu Dhabi this year, where it was extended for other 2 years until the March 31st of the 2026. And this extension reflects the ongoing importance of the moratorium in facilitating digital trade, despite the deep division and contentious debate that have characterized its history. Let's see now the EU context. So the attention of the European institution to e-commerce dates back to 1997, when the European Commission provided an initial definition of e-commerce, pointing out that development of the e-commerce in the information society was an opportunity to strengthen the competitiveness of the European industry. In this perspective, the Union legislature initially and then the national legislature began legislating on the most discussed aspect among the industry operator, like establishment of service providers, commercial communication, electronic contract, intermediary liability, without, however, addressing by express exclusion tax obligation. The regulatory framework of this time stipulated that good value at or below 150 euro were exempt from import duty. This important measure, however, creates some critical aspects, as we already said, because European Court of Auditor, for example, following an audit, highlight how custom exemption for low-value shipment encourages systematic underreporting of good in import declaration for the purpose of evasion. Such criticism was also been raised by Olaf, and probably our colleague will say later. Additionally, European institutions highlight a lack of willingness among member states to activate an administrative cooperation mechanism for exchange of information, and they lack executive power outside their jurisdiction to ensure the full collection of VAT in member states where goods and services are consumed. Why this? Well, we have to say that the Union Code was conceived for a business model based on a traditional commerce. However, the progressive increase in e-commerce transaction necessitate a reconsideration of the custom procedure of collection and control of duty and VAT. We have to think, for example, that according to the accompanying report of the new code in the 2022, 890 million e-commerce transactions were declared, representing the 73% of all custom import declarations. So a very huge number, we can say. And these are low-value transactions. As these low-value transactions, they often incur high administrative costs and financial benefit. Additionally, the duty exemption, as we already said, has facilitated systematic abuse, distorting market competition. In this regard, European Commission proposed change to custom rules, which are set to be implemented in 2025 and 2028. And the new code foresees by 2028 a veritable revolution in a union e-commerce. The custom management of the e-commerce is one of the focal points on which the new code focuses. Well, the reform, first of all, abolished the current exemption, therefore, for custom duty for a good value below 150 euro, exploited by fraudsters, as we already said. We have to think that up to 65% of such parcels entering in the EU are currently undervalued to avoid custom duty. The elimination, as we can understand, of custom duty exemption could necessitate to provide a more custom information. In this sense, the new code aimed to increase harmonization across the EU member states through measures like the EU Custom Data Hub. This last one will provide a single interface that will facilitate both the provision of information by e-commerce intermediaries and the processing of such information by custom authority. Furthermore, there is a change in a moment when the custom obligation is deemed to arise, no longer upon the submission of the declaration and their entry in the good in the EU territory, but at the time of the payment for the sale, similarly like the VAT. In this regard, today's reform will make an online platform a key role in ensuring the goods sold online in the EU comply with all custom obligation. This is the major departure from the current custom system, which put the responsibility on the individual consumer and carrier. Platform will be responsible for ensuring that custom duty and VAT are paid at purchase, so consumers will no longer be hit by hidden charges or unexpected paperwork when the parcel arrived. With the online platform as the official importer, EU consumer can be reassured that all duty have been paid and that their purchases are safe and in line with the EU environmental, safety and ethical standard. Another important change concerns the combined nomenclature as well as classification, origin and value. The current provision appear overly complex for regulating e-commerce. Therefore, a simply tariff treatment is envisaged with if the opt by the importer will allow him to be exempt for the providing proof of preferential origin and to include in the custom value the transportation cost to the final destination of the good, while currently, as we know, only transportation costs up to the entry in the EU territory are included. In conclusion, we have to say that alignment between VAT and custom regulation will allow online sellers to offer an all-inclusive price to consumer in the EU with a likely reduction in compliance costs for economic operator. At the same time, citizen and consumer will benefit from an increased protection against the harmful and fraudulent product, thanks to a system of interception, this time at the union level and not limited to the domestic one. The new tailor-made e-commerce regime is expected to bring additional custom revenue among €1 billion per year, so something so efficient, so we can say. And in other words, we can say the Commission has today put forward proposal for a most ambitious and comprehensive reform of the EU Customs Union since its establishment in 1968. So thank you so much for your kind attention. If you have any question, I'm here. Thank you.